Hello, welcome, and good evening to all of you. Welcome to Unacademy IAS, a one stop destination for all the English medium civil services aspirants. Now, before I start the discussion, please do let me know, am I audible and visible for all of you? Am I audible and visible? Done. Thanks a lot. So, let's start the discussion. Today, in this particular live session, we'll have a detailed discussion on the concept of one of the most important reforms since 1991, that is the goods and services tax. What was the model of GST that was implemented? What were the flaws? What were the features? And recently, the government of India, that is GST Council, has come out with a new set of reforms, that is GST 2.0. How is it different compared to the earlier structure? Why this is referred to as a structural reform under the GST? Let's understand in today's video. Now, before I start, if you're liking this initiative, do not forget to hit the like button. And if you're yet to join our YouTube channel, kindly join right now. With that, let me start the discussion. The first very important concept I want to make you understand, because if you want to understand GST, first you need to understand the important basics. Like we did yesterday, before we understood the advanced concept of inflation targeting, first we understood the different concepts. Let's adopt the same model. Let's understand the important concepts first. Indirect tax. What is the meaning of indirect tax? Please understand, there are direct taxes and there are indirect taxes. What is the difference between a direct as well as an indirect tax? Whenever the tax burden can be shifted, repeat, whenever the tax burden can be shifted from one person to another, that is called as an indirect tax. And whenever the tax burden cannot be shifted, that is, the government will impose a tax on one person or the taxpayer, and it is the same taxpayer who will pay the taxes to the government. The burden falls on the same person. That is called as a direct tax. Let me give you an example here. In case of the income taxes are a prime example of a direct tax. That is basically the government will impose an income tax on me, and it is me who will bear the burden of income tax. And by the way, right now the income tax filing is going on. So basically, the income taxes are the prime example of direct taxes. Whereas in case of indirect taxes, the best example is the goods and services tax. We'll understand what is GST, don't worry. But why is the GST an indirect tax? Why it is referred to as an indirect taxation? Simple. The government of India will impose a tax on the shopkeeper. The government will impose the GST on the manufacturer. The government will impose a GST on the restaurant owner. But what they do is, when you go to the restaurant, when you go to the shop, etc., to purchase a good or a food item, etc., when they hand over the bill to you, the bill, that is the market price, will be including the GST. Price that you pay is inclusive of GST. So the burden, essentially, that is the final resting place of a tax, is on you, that is the consumer. So here the tax was imposed on the restaurant owner, but they transfer the burden to the consumer, or the, right, let's say the customer. Because this particular tax burden can be shifted, this is called as indirect tax. Now, please do let me know, all those who are present in the session. I want a confirmation from your side. Everybody is okay with the concept of a direct as well as an indirect tax? And everybody is okay with the concept of a direct and indirect tax? If I were to ask you, let's say, corporate tax is what type of a tax? Tell me. Corporate tax is what type of a tax? Direct or indirect? I want an answer from all of you. If you don't answer, I will not discuss further. And I know a lot of you will basically say, great, sir, stop the discussion. I don't want this particular topic. It's very difficult, etc. Corporate taxes is a direct tax. It is basically a direct tax. Another example, a property tax. Tell me, property tax. Is it a direct tax or an indirect tax? Property tax is a direct or indirect? The property taxes are a direct tax. The sales tax, the sales tax, is it a direct tax or an indirect tax? Sales taxes are a direct tax or an indirect tax? Please do let me know. Ah, sales taxes are indirect taxes. Sales taxes are, some of you are saying direct. No, my dear, indirect tax. It will be imposed on seller. They will transfer the burden to the consumer. Right? Today, there is no concept of a sales tax because it has been subsumed. Earlier, sales tax became part of the VAT system. You'll understand that in some time. Don't worry. The VAT has been subsumed under the concept of GST now. And everybody is okay with the term direct as well as indirect. Now, there is a concept of VAT to GST. Concept of VAT to GST. Now, before I start with the second concept, listen to me very carefully. A lot of you are basically going for self studies to appear for the UPSC 2026 and 2027. And when you begin your preparation, when you start with your preparation, there are a lot of doubts, there are a lot of confusion, etc. Now, one way to get these particular doubts resolved, all your questions addressed, is the new initiative that we are going to conduct on 18th, 19th, and 20th. We have a special class initiative for you people, especially those who are writing Civil Services 26 and 27. Please attend these particular special classes who will be taken by top educators of Unacademy from the English team. This is the schedule. Right? Please have a look at the schedule. On 18th September, that is tomorrow, 7 p.m. to 9 p.m., I'll be taking a special class. 18th and 19th, Sarmad sir will be taking special class from 8 p.m. 18, 19, and 20, Abhishek sir will be taking history special classes. And all of these special classes that I'm mentioning here are free of cost. And all of them will be conducted on a platform. Do check out the details by clicking on the link provided in the description below. Right, so this is basically the schedule for geography classes to be held by Mukesh sir. And finally, these three special classes will be taken up by Chethan sir. Do not miss out on these particular special classes. Please do attend them. Now, let me go forward. First is the indirect as well as the direct tax. Second one is VAT to GST. This VAT to GST, please listen to me very carefully. There is an activity that is a production activity. The production activities, according to the provisions of the Constitution of India, were to be taxed by the central government. Right? Were to be taxed by whom? By the central government. And for that only, the government of India introduced excise tax, excise duty or excise tax. And that would be imposed on production activity. And once the production is done, essentially now the sales has to be conducted. Now the sales activity, as per the provisions under the constitution, the power to impose a tax on that was given to the state government. Was given to the state government. And the state governments announced and imposed sales taxes. Announced and imposed sales taxes. So initially what happened? There would be an excise duty imposed by the center, that is on production activity. And on the sales activity, the state government would impose sales tax. But this kind of a structure where different taxes are imposed by different government, different levels the taxes are imposed, this actually led to cascading effect. This actually led to cascading effect. What do you mean by cascading effect? Simple. You are going to impose a tax on an existing tax. I'll repeat the statement. If you impose a tax on an existing tax, that is called as a cascading effect. Sir, how? How is that possible? Let's assume we will purchase certain, right, let's say inputs or raw material from A, right? A will charge 100 rupees and on this a tax of 10 rupee would be imposed. So B would have paid how much? Total 110 rupees. Now B will add a value of 20 rupees. That is labor, profitability, etc. Will add a value of 20 rupees. Now B wants to sell it in the market. Now if the price is considered to be 130 rupees, and on this 130 rupees, let's say the government will impose a tax. Let's say on 130 rupees, the government will impose a tax. Now, please tell me, can I simply say at this particular step, that is a step number 2, there is a tax which is being imposed on existing tax? Everybody is okay with the concept here? Do let me know. When you impose a 10% tax, let's say on 130 rupees, can I simply say a tax is being imposed on an existing tax? Some of you might be wondering, sir, what is happening here? A 10% tax imposed on 130. 130 also includes a tax of 10 rupees. 100 plus 20 plus 10 rupee tax. So when you impose on 130, it is as good as saying it is a tax on a tax. This is called as cascading effect. So earlier, when this kind of a system was followed, where different transactions at different levels were taxed by different authorities, there was a cascading effect. And what is the problem with the cascading effect? I simply say because of the cascading effect, a product when it is finally sold to the consumer will have to pay very high amount of taxes to the government here. Correct? The market prices would be higher. The consumer will have to pay very high amount of a tax burden. Right? So the cascading effect actually led to very high burden of taxation on the consumer. And by the way, some of you might be thinking, "Sir, why the consumer is bearing this burden? Why should the consumer pay the taxes?" My dear, please remember this. Manufacturers, whenever they pay any kind of indirect taxes during the course of production, important, during the course of production, any kind of indirect taxes are paid by the manufacturer, they will simply transfer the burden to the consumer. Reason being, the indirect taxes that are paid by the manufacturer is on a product. To manufacture a product, who is going to use the product? Consumer will be using the product, right? So if the consumer is going to use the product, why should the manufacturer bear the indirect taxes? It has to be paid by the consumer only. That's the reason indirect taxes, finally, the burden, all the indirect taxes, the burden will fall on the consumer only. Right? So in cascading effect, the burden of taxation on the consumer was very, very high. And have a look at this. The indirect taxes at that point of time varied from one state to another state. One state would have a different sales tax. Another state would have a different sales tax. Right? So one state to another state, the indirect taxes were different. Central government, state government, there were multiple indirect taxes. Now, from the viewpoint of the manufacturer, I repeat, from the viewpoint of the manufacturer, you just think of it. Do you think this kind of a taxation structure is preferable? Where from one state to another state, tax rates are different. From center to the state, taxes are different. Right? So this will create a lot of complexity. From the viewpoint of the manufacturer, this will create very, very complicated web of taxation structure throughout India. So earlier, the problem was multiple indirect taxes were levied by the center, by the state. The indirect tax rates were different amongst the states themselves. In order to address this kind of a structure, today we have implemented a tax system called as the goods and services taxation. And I'll prove that today. Don't worry. In the course of the discussion of this particular session, we will prove that. You will understand why GST is much better compared to earlier taxation. Why GST is said to be promoting ease of doing business. What is the importance of the GST, etc. You'll understand that. Have patience. There is one more terminology, input tax credit. input tax credit and destination based taxation. Input tax credit, what does it actually mean? Right? Listen to the example very carefully. Imagine you are manufacturing the marker. Can everybody see the marker? Right? Can everybody see the marker? Imagine you're manufacturing the marker. Or else, let's take another example. Let's say mobile phone. Let's say you're manufacturing mobile phone. To manufacture the mobile phone, you will purchase inputs. And when you purchase inputs, you will pay GST on the inputs. Right? You will pay GST when you purchase the inputs. Now, this GST that you have paid when you purchase the inputs will be credited back to your account. When I say your account, there is a GST account that you have to create. Whatever taxes you pay on the inputs are given back to you. And what is the importance of this particular point? Because the taxes you pay on the inputs are given back to you, can I simply say you will not be transferring the burden of this taxation to the consumer? Yes or no? Right, please do let me know. Right, sir, what is the meaning of it? Let's take this same example. Let's take the same example. Imagine you're the manufacturer B. You purchase inputs from A. Let's assume I am A. I will sell the inputs to you and I will collect 10 rupee GST from you. I'll collect input taxes. Now, when you manufacture the product, sell it to the consumer in the market, the government simply says, whatever taxes you paid when you purchase the inputs will be credited back to you, will be given back to you. And because the taxes that you have paid on the inputs are given back to you, you will not be transferring the burden of taxes that you've paid on the inputs to the consumer. That is, in a nutshell, can I simply say, when you decide to sell this particular product in the market, I'll rewrite the calculation now. You will purchase the inputs at 100 rupees plus taxes on the inputs will be 10 rupees. Now you will add a value of 20 rupees on the product. You want to sell the product to the consumer now. So how will you calculate the prices? You will calculate the prices as 100 rupee on the inputs, 20 rupee on the value addition. You would want to sell it at 120 rupees plus GST. Is everybody able to understand the calculation here? Do let me know right now. And because, right, this particular 10 rupee taxes that you have paid on the inputs are credited back to you, you will not be including the 10 rupee when you calculate the price at which you want to sell to the consumer. This 10 rupee basically is nothing but input tax credit. Everybody is okay with the concept of input tax credit. And please remember this. The input tax credit is one of the very important features or characteristic of goods and services taxation. Now, the very important characteristic, because earlier there were multiple situations where despite making reforms in the indirect taxation, there was a cascading effect. I repeat, earlier multiple reforms have been implemented. For example, initially there was a sales tax. Now it was realized that there is too much of a cascading effect that is happening because of the taxes being implemented by the center separately and the states separately. And basically what the governments decided was, let's restructure. Let's go for a new concept called as a VAT, value added taxation. That was a reform, by the way. That was implemented by the states. But even under the taxation of VAT system, right, the model that was followed under the VAT system, there was still a cascading effect present. Right? There was still a cascading effect. Now, Government of India simply says, once we adopt the concept of GST, doesn't matter if the product is sold in the same state, if the product is sold in a different state, doesn't matter. At every step, GST will be imposed, collected, which will be credited back in the next step. I'll repeat the statement. At every step, when you purchase the inputs, you pay GST. And in the next step, when you sell the output, the GST that you pay on the inputs will be credited back to you. This is basically the defining feature of input tax credit. Everybody is okay with the concept of 1, 2, and 3. Can I go to the final concept? That is a concept of destination based taxation. Destination based taxation. Now, what is the meaning of a destination based taxation here? Destination based taxation essentially means in whichever state the good is consumed. I repeat, in whichever state the good is consumed, it is that state which will get the GST component. I'll repeat the statement here. In whichever state the GST is consumed, it is that particular state which will get the GST component. Right? For example, let's say there is a state 1 and the state 2. This particular mobile phone, let's assume, is manufactured in the state 1. Let's assume it is manufactured in the state 1. It is moved across the state 2. The mobile phone is consumed in the sense purchased. Please understand, whenever I use the term consumed, do not literally take the meaning, right? The literal meaning of the word consumed. For example, right now, a lot of you are consuming your dinner, but you will not consume your mobile phone. That is literally eat mobile phone. No. Then what will you basically consider when they will say consumption of right? Consumption of car, consumption of services, etc. So consumption means usage. Do not take the literal meaning of the word consumption. So let's start now. The mobile phone is manufactured in the state 1, moved across the border, consumed in the state 2. Now the GST component will be given to which state? I want your answer for this question. The mobile phone is manufactured in the state 1. The good is moved across the border into the state 2. The consumption of the mobile phone happens in the state 2. The GST component goes to which state? It will go to the state 2. It will go to the state 2. That is the reason this is called as a destination based taxation. Destination based taxation. In fact, when this particular model was announced, when this model was announced by the union government, at that particular point of time, multiple states were opposed to this model. They were opposed to this model. For example, the former chief minister of Tamil Nadu, Jayalalitha, she basically said, no, we will not accept the model of GST. Why? Tamil Nadu as a state is a production state. It is a production state. So if the GST model that is going to be implemented will be a destination based model, Tamil Nadu will be losing lot of tax revenues under the GST. All of you able to understand? Because it is a production state, lot of goods which are manufactured in Tamil Nadu will be consumed in other states. And these other states will end up getting the benefit of GST and Tamil Nadu will be on a losing side. In fact, a lot of the production states argued the same. But understand the reality here. I hope you understand. Understand the reality. Point number 1, you are assuming that whatever is produced in one state is consumed outside this particular state. You are taking example of one product. That is, I took the example of one mobile phone. But do you think in that particular state only one phone is manufactured? Correct? All of you are able to understand? Point number 2, just like what is manufactured in the state 1 is consumed in the state 2, can the vice versa also happen for other goods and services? Correct? Can the vice versa also happen for other goods and services? And if you look at these particular states, production states, Maharashtra, Tamil Nadu, Karnataka, Gujarat, etc., don't you think these particular states have a very large size of consumers? Because production states means the employment is very high. The salary is paid to the, let's say the the workers is also very high. If the salaries paid are higher, they will consume lot of goods and services. So obviously, in the same state, lot of consumption happens. That is the precise reason. I hope you understand. Initially, there was a lot of opposition to the destination based model of GST. But later on, the government of India simply said, one, it is not going to lead to lot of loss of revenues. And second, if there is any loss of revenues, the government of India announced a concept of compensation. I'll come to the idea of a compensation in some time, don't worry. But everybody is okay with the concept of the, right, let's say the important concepts associated with the GST so far. Please do let me know. Do let me know in the chat section. Everybody is okay with the concepts associated with the GST. Now, let's use all of these, right, basically to understand the model of GST. But before that, let's start solving with a question. Let's start by solving an MCQ. And by the way, this is the PYQ. Solve this particular question as soon as possible. Solve the question and do let me know the right answer in the chat section. Megha, sir, but Bihar and UP have more worker than Gujarat and Maharashtra, my dear. No, whatever arguments you provide, please look at the top earning states of under GST in India. The production states are the top earning states. The production states are the top earning states. Okay, what is or are the most likely advantages of implementing goods and services taxation? It will replace multiple taxes collected by multiple authorities and will thus create single market in India. Single market in India. Single market means what? Instead of center having a different tax rate, states having a different tax rate, now throughout India, only one rate is applicable. Correct? Throughout India, only one rate is applicable. That is true, by the way. For example, if you purchase a product in, let's say Uttar Pradesh, whatever is the GST rate, say GST rate is applicable for the same product when sold in, say, Punjab, when sold in Assam, when sold, right, let's say in Karnataka or Bihar for that matter. Doesn't matter. One product will attract the same tax rate. Everybody is okay? So first statement is it true? It will drastically reduce the current account deficit. A lot of you will basically say, sir, current account deficit. वो क्या होता है? Please tell me right now. I want to become a PhD holder right now. Tell me. My dear, in the balance of payments, there is a concept called as a current account, which basically takes into consideration, apart from other things, imports and exports. Again, I'm saying, I know a lot of you will start correcting me. I'm saying apart from other things, imports and export. Right? So if the value of the money outflow, that is the dollar that we are paying to the rest of the world, if it is higher compared to inflow, in this account, it is called as a current account deficit. That is, dollars are going out compared to dollars coming in. So GST will drastically reduce the current account deficit. No. And please remember, most of the times, not always, most of the times, the extreme words, whenever UPC uses the term extreme words, it will not be correct. It will not be correct. They're saying drastically will reduce. No, it will not happen. Third one, have a look at this. It will enormously increase the growth and the size of the economy of India, and it will enable India to overtake China in near future. My dear, India has overtaken China already in population. But just because you have implemented GST, you are not going to overtake China. I hope you understand. Just because of GST, you are not going to overtake China. Right? So I hope you understand. It will enormously increase the growth. GDP will increase enormously. If that was true, please do let me know. If that was true, don't you think GST would have been implemented after independence? Why did we wait for so long? I repeat, why did we wait for so long to implement GST? Because as of now, before India, hundreds of countries have implemented GST. The GST model is new for India, doesn't mean GST is new. For India, for you, it is new. But in the global market, more than 100 countries had already implemented GST, by the way. Right? So, just because you implement GST, it will not alone help India to overtake China. That alone will not help. So, third is also incorrect. A lot of you are saying 1 and 3 is correct. No, third is also incorrect. Right option for the question will be option A, 1 only. 1 only. Done? Okay, let me go forward. Let's understand the GST in detail. So far, we have understood the basics. Let's apply them. Let's understand the GST in detail. Then we'll understand the problems. Then we will understand the reform. Why the recent reform is so important. The GST will be or was implemented in India. It has come into force from 1st July 2017. From the 1st July 2017, the GST has come into force. Why it was implemented? To basically streamline indirect taxes. To streamline the indirect taxes. Rather than center states having different types of indirect taxes, now one nation, one tax. Please remember, that is the central theme of GST. One nation, one tax. Second, the constitutional amendment has empowered. A new constitutional entity has been set up. New constitutional authority has been set up to basically look into the GST. What is the reason? In the Constitution of India, there is Schedule 7. And the Schedule 7 divides the taxation powers between the center as well as the states. Now imagine you are taking certain powers, indirect taxation powers of the central government, indirect taxation of the state, right, government like this, subsuming all of them into one tax. Don't you think you need to amend the constitution first? You need to amend the constitution. So the constitution was amended. 101st Constitutional Amendment. 101st Constitutional Amendment Act. This was passed basically to make changes in the constitution and then bring in the GST. Now, what is this constitutional authority I'm talking about? The constitutional authority or the constitutional body that was established for the implementation of the GST is the GST Council. GST, Goods and Services Taxation Council. The GST Council has been set up by the President of India under Article 279A. Please remember all of these. All of these are very important. Under Article 279A, this has been established. And basically, this constitutional authority will be chaired or headed by the Finance Minister, Union Finance Minister. So, the Union Finance Minister will be the chairperson. But in addition to the Union Finance Minister, there will be representation of state ministers as well. And even those union territories, I repeat, those union territories which will have the legislature will also have a representation here. And that's the reason they'll basically say the GST Council is a prime representation of cooperative federalism. All of you heard of the term here? Please do let me know. It is a prime example of cooperative federalism. That is essentially both center as well as the states coming together for effective implementation of a particular policy. Another example that you can write, remember, just in case you want to write about cooperative federalism, is Niti Ayog. Another example of cooperative federalism in case of India is Niti Ayog. In Niti Ayog, there's a governing council. Earlier, there was no representation of the states in the planning commission. But under the Niti Ayog, which has replaced the planning commission, there is a representation of the states. Right? So, this is a prime example of a cooperative federalism in India. Now, what is the role of the GST Council? What is the function of the GST Council? The GST Council is the authority which will take the decisions regarding the GST. For example, what kind of goods and services should be taxed at what rate? Should we increase the tax rate? Should we reduce the tax rate? All of the decisions are essentially taken by the GST Council. The best example that I can think of is the most recent announcement done by the GST Council to reduce the tax rates, to rationalize the tax rate. We will discuss that in some time, don't worry. So, everybody is okay with the discussion so far? The constitutional authority, etc., etc. Now, apart from that, there is also requirement of quorum in the GST Council. What is a quorum requirement here? What is the minimum number of members who should be present to start the deliberation, to start the discussions? So, the quorum requirement of the GST Council is minimum 50%. And whenever you talk about the decision making authority, the GST Council, who decides? Is it the decision of the finance minister that will prevail in the council? Or is it the decision of the state governments which will prevail in the GST Council? Please remember, if every member of the GST Council agrees, that is consensus, then the decision is taken through consensus. That is no opposition. Every member is agreeing. But let's say certain states are opposed to a particular proposal. Right? Some states will say, let's increase the tax rate. And some states will say, no, 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 let's decrease the tax rate. And some states will basically say, let's keep the same tax rate. And the finance minister, that is a representative of the union government, I do not know whether to go with this, that, or this. In that particular case, when there is a division in the GST Council, there shall be a voting. Remember this. Whenever there's a division, there shall be a voting. That is the decision of the GST Council. In this case, shall be done through voting, where one third of the voting rights are given to the center and two thirds are equally divided. I repeat, equally divided amongst other representatives. Whether the state is big, small, largest, smallest, northeastern, southern, doesn't matter. The remaining two thirds of this particular voting is divided equally amongst all the other participants, all the other stakeholders. Now, voting will happen, and if the decision has to be done, you require at least 75% of present and voting. Need majority of at least 75% of present and voting. And this is where there is also criticism. What is a criticism? You require at least 75%. You think of this. If all the states agree, central government will disagree. That is, the finance minister will disagree. Can you muster 75% in the GST Council? Do let me know in the chat section. All the states are on board. Center will disagree. In that case, can you get 75% of the present and voting? Not possible. Why? Center is present. Center will vote against the proposal. And the center has weightage of how much? 33%. The center has 33%. The maximum that you can get is a 67%. So there is also criticism saying that you talk about the GST Council for cooperative federalism. You give this as an example of cooperative federalism. But center effectively holds veto here. And the government doesn't say this, but that is a meaning. Because until and unless the center is present and doesn't vote in your favor, you cannot get anything passed in the GST Council. Done? Right? So these are certain very important points associated with the GST Council. Right? Next, before I take up the next concept, please look at the question. Solve the question now. Consider the following statements. The GST Council is a constitutional body. Straightforward question, by the way. It is headed by the Prime Minister. In case of voting, you need a majority of 51% of overall votes to make a decision. How many of these particular statements are true? Only one, two, or three? Do let me know the answer. Some of you are saying A. Remaining are saying D. Surya says only one. Ah, so GST Council is a constitutional body. Yes, that is true. GST Council is a constitutional body, right? Those who are saying option D, why? What is the problem with the statement 1? And so statement 1 is correct. It's a constitutional body. It is headed by the Prime Minister. No, not headed by the Prime Minister. It is headed or chaired by the Finance Minister. It is chaired by the Finance Minister. In case of voting, you need majority of 51% of overall votes. No, this is also incorrect. Just now we have discussed 75% of present and voting. So of the three, first one is correct, second and third are incorrect. Right option for the question will be option A. Only one is correct. Okay, let me go forward. The model that is followed in case of India, the GST model that we follow is called as a dual GST model. Dual GST model. This is a dual GST model. Whenever you take a product, it will attract a GST. What is the GST rate right now? Again, what is the GST rate right now? We have 5, 12, 18, and 28. And before somebody will remind me, sir, these rates are out, only 5% and, right, let's say the 18%. My dear, that will come into force from 22nd September. Correct? All of you know this. That will come into force only from the 22nd September. And we are on 17th September. So we are still following the same model, 5, 12, 18, and 28%. Take any GST rate, let's say 5%. The 5% is equally divided. I repeat, the 5% is equally divided into two parts. One is CGST and the other one is SGST. What is a CGST? CGST stands for Central GST. And what is SGST? It stands for State GST. The Central GST in any case, whether the good is produced, consumed in the same state or produced in one state, consumed in another state, doesn't matter. It will always go to the central government. Is this point clear to all of you? Please do let me know. Right? The central GST in any case, whether the product is consumed in the same state or a different state, doesn't matter, will always go to the central government. That is central GST. Now somebody will ask, sir, what will be the rate if it is 18% GST? My dear, take 18%, divide them into two equal parts. And the moment I say divide them into two equal parts, lot of you will take your smartphone, open the calculator app. Why? Your CSAT is very strong, by the way. You will basically open the calculator app, type 18, right? Then divided by 2 you will do. No, please don't do that. That will become basically 9% and 9%. 9 and 9. This 9% will go to the central government, CGST. Remaining 9% will go to whom? Remaining 9% in the second example and 2.5% in the first example will go to the state where the good was consumed. I'll repeat the statement. The 9% in the second example and 2.5% in the first example will go to the state where the good was consumed, not where it was produced, where the good was consumed. Right? So it is very clear to all of you. So SGST will go to the state where the good is consumed. CGST anyways will go to the central government. This is basically the model of the dual GST that we are following in India. And this is not a novelty, by the way. Right? For example, we have taken this particular model from Canada. We have taken this particular model of dual GST. Of course, the name is different, federal, etc. The different, let's say, names are used in Canada. But in case of India, same model, but name is different. Dual GST model. Is everybody okay with the discussion with this particular point? Next one, GST Council will decide when to impose the taxes on fuels. When to impose the taxes on fuels. What do you mean by impose taxes? Right now, the GST is already there. That is, these particular fuels are covered under the GST. But the GST rate has not been notified. I'll repeat the statement. If UPSC will ask you, right, are these covered under the GST? Are the fuels covered under the GST? Yes, these are covered under the GST. But the GST rate has not yet been notified. Please remember that. And I know some of you will be thinking, sir, why? Why the GST rate is not yet notified on the fuel items in India? The reason is very simple. According to the GST law, the maximum rate of tax you can impose is 40%. Remember this. The maximum rate of GST that you can announce under the GST law is 40%. But the fuels, if you take the central government plus state government taxes, the fuels in India attract much higher than 40% tax. I'll repeat the statement. According to the GST law, the maximum rate that you can notify under the GST is 40%, nothing more than that. But the fuel, so for example, petrol, if you purchase petrol and assume, let's say you pay 100 rupees, out of 100 rupees, 50 rupees is in the form of center plus state taxes. So the tax rate on the fuels in India is much higher compared to the maximum rate that is allowed, that is permissible under GST. That's the reason so far the states have not been willing to basically give away this taxation power on the fuels. GST rate can be notified, but not yet notified on the fuels. The central government will have a different tax and the state governments will have a different tax. Everybody is okay. And what about other products? For example, alcohol. For example, alcohol, please remember, alcohol for human consumption is not under GST at all. I'll repeat the statement. Alcohol for human consumption is not at all under the GST. It is still being taxed. Production is being taxed by the state governments, by the way. Imports are being taxed by the union government. Right? It is not even covered under the GST law. Right? So these are certain very important points. Please remember all of them. And finally, the issue of compensation. I told you, right, earlier, compensation. The states were worried that if I give away the taxation power, I'll repeat the statement. The states were worried that if I give away the taxation power under the GST, I'll be losing my fiscal autonomy. I'll be losing my fiscal autonomy. For example, imagine, right, time is 7:50. Let's say you are the chief minister and you are the chief minister of a state before GST, not under GST. Before GST. Congratulations, by the way. Now you tell me, according to your requirement, can you decide indirect tax rates according to your need? Yes or no? According to your requirement in this particular financial year, can you decide any kind of a tax rate on the goods and services? The powers are given to you under the Constitution of India. So earlier, that power was there with the chief ministers, that is the state governments. Now, you are giving away this particular power to the GST Council. GST Council will take the call. You alone cannot dictate the terms in the GST Council. There is a cooperative federalism now. So don't you think you will be worried, concerned about the tax revenues? So the government of India simply said, once the GST comes into force, from the date of enforcement, 5 years, I will give you compensation. I will give you any kind of revenue loss that you are going to incur. And by the way, there was a formula for this. There's a mathematical formula. So formula was given by the government. According to the formula, if you incur any kind of revenue loss in the first 5 years, the center would provide compensation to you. Now you tell me, has it been more than 5 years since the implementation of GST? Has it been more than 5 years? Of course, yes. We have completed 8 years of GST. So the government of India back in 2022, back in 2022, 2017 to 2022, 5 years, simple. The government of India back in the year 2022, after the 5 years was over, basically said no more compensation to the states. No more, absolutely no more compensation to the states. So after 2022, June 2022, the government of India has not paid any kind of compensation to the states under the GST. Okay, so far, please do let me know. Everybody has understood whatever we have discussed. Now I'll explain to you what were the problems of GST, why the government announced reforms under GST. Are there any challenges even to the current model of GST? Everybody is on board? By the way, somebody was asking, I think it was Chirag, was simply saying, sir, was there cascading effect under the VAT system as well? Yes, my dear. Yes. Answer to that question is yes. Under the VAT system, that is value added taxation that was announced by the states to replace the earlier sales tax regime, there was a cascading effect. That would happen whenever the product moved from one state to another state. There was a cascading effect even under the VAT regime. But under the GST, doesn't matter. I repeat, under GST doesn't matter whether the good is produced in one state, moves across the border, consumed in the second state. At every step, whatever GST you pay on the input will be credited back to you in the next step. Is my point clear? I'll repeat it again. Whether the good is produced here, there, right up, doesn't matter. Under GST, whatever taxes you pay on the inputs, you can claim a credit on that when you sell the output. Input tax credit is a very important feature of the goods and services tax. Everybody is okay? Now, listen to me very carefully. But before that, let's solve one more MCQ. Before I tell you what were the problems with the GST model, let's solve this. Consider the following statements regarding GST. It is a destination based taxation. It is a multi point tax collection system. It is basically the system where the exports are zero rated. And the first statement should not be difficult for all of you. Correct? The first one should not be difficult. It is a destination based tax. That is, the state where consumption happens, it is that state which will get the GST. That is the SGST component. First one is correct. Right? A lot of you are saying A. Huh. Let's start. It is a multi-point tax collection system. Be very careful. A lot of you are saying A, by the way. Let's start. It is a multi-point tax collection system. They will use the term either multi-point or multi-stage. What is the meaning of multi-point or multi-stage? A will manufacture something, will sell it to B. B will manufacture something, will sell it to C. C will manufacture something, sell to D. And let's say D will sell to the consumer. Is it okay? Let's assume this is a supply chain. Let's assume GST is collected at every step. Is this point clear to all of you? GST is collected at every step, by the way. Of course, yes. Right? Whatever B will pay in the form of GST, when B will purchase the inputs, will be credited back. The input tax credit will be provided to B. That is not right. There is no dispute regarding that. But can I simply say at every step here, there is a collection of GST? There is imposition and collection of GST. Everybody is okay with the statement. So can I call this as a multi-point tax collection and multi-stage tax collection? Please do let me know in the chat section. Everybody is okay with the term multi-point or multi-stage? Yes, this is true, by the way. This is true. Third one, the exports are zero rated under GST. Exports are zero rated. What do you mean by the term zero rated? Listen to me very carefully. There are two terms. A lot of you will be confused with these two terms. One is basically exempted, and the second one is zero rated. Understand the difference between both of them. I repeat, a lot of you will be confused regarding these two terms. Understand very carefully. Let's start. Let's assume you are manufacturing this particular mobile phone. You will purchase inputs. I repeat, you will purchase inputs and you will manufacture the mobile phone, sell the output. Now, if the output is 0% GST, on the output, if the tax rate is 0%, this is called as exempted. Is everybody able to understand this? On the output, when you sell, the inputs can have 5%, 12%, whatever it is. When you sell the output will attract 0% GST. This is called as exempted. Any example, my dear? Insurance. Very recently, this was announced. Do let me know in the chat section. Very recently, it was announced. Yes or no? If you have listened to the finance minister very carefully, if you have read the newspaper articles very carefully, they will mention it is exempted or tax rate is nil or tax rate is zero. That is, on the product that you sell, the tax rate will be zero. But it doesn't mean that inputs will also attract 0%. Everybody is okay with the concept of exempted. Now shift to zero rated. Shift to zero rated. Now listen to me very carefully. You are manufacturing this mobile phone. You will purchase inputs, and on the inputs you will pay GST. On the inputs you will pay GST. Now the government simply says the GST will be credited back. That is, you will get input tax credit on the GST that you have paid on the input. Now just tell me, think of this and do let me know. When you take the inputs, use the input to manufacture a product and you want to export the product, you want to export it to USA, will the market price include any GST? Do let me know in the chat section. Will the market price that you decide, I'm talking about zero rated here, will the market price include any GST? Yes or no? Please tell me the answer. None of you are answering, by the way. You'll be like, sir, right, I'm watching kabaddi. You forget about everything else. I'm watching sports now. My dear, in the second case, that is zero rated, the inputs that you have purchased, you pay GST, but you will get the input tax credit. That is, whatever you pay on the inputs, you will get it back. So when you decide the market price of your export, there is absolutely no component of taxes in your market price. There is absolutely no component of taxes in the market price. Everybody is okay with this. In the first case, the product that you sell, the product will attract 0% GST. The inputs, right, you would have paid GST on that. Inputs, you have paid GST. The product that you sell, output that you sell, attracts 0% GST. But in the second case, you will purchase inputs, you will pay GST. That GST will be credited back to you, input tax credit. So if you pay 10 rupees on the input, you will get the 10 rupee back. In that particular case, when you decide the market price, of your product, you will not include any GST in the market price. This is called as zero rated. Now somebody will try to basically convince me that, sir, even in the first case, you will get ITC. Then I will realize you people have not read newspaper correctly. I will realize you people have not read the newspaper correctly. Why? Read the newspapers correctly. Tell me now, in case of insurance companies, as the government said, when I impose a nil, when I exempt, right, the insurance sales that you do, I will provide you input tax credit. Has the government of India stated that? Has the finance minister stated that anywhere? Give me the newspaper article. Show me in which article it has been stated. In fact, if you have read it very carefully, the articles basically say the insurance companies now will not be allowed to claim input tax credit. Check it, by the way. This is your assignment. Please check it. And some of you will basically say, sir, how do I check it? I will have to go to Afghanistan to check it. Right? I will have to go to USA to check it. No. There is Google. All of you have got access to Google. In fact, there is a very nice statement associated with the Google. Google will give you the answers to even those questions to which God cannot answer. Google will give you the answers to even those questions to which God cannot answer. So understand the logic here. For the goods where the tax rate is nil, that is, the output is taxed at nil. Output is exempted. They will not be allowed to claim input tax credit, which means you cannot claim ITC. On the inputs, you can't claim ITC. Only the output that you sell will be will be attracting 0% tax or nil tax. Divya is saying, give example. My dear, insurance, is it not an example? Listen carefully. Insurance, I started with that only. Is it not an example? I'm talking with an example only, but you're not listening carefully. So everybody is able to understand the difference between exempted and zero rated? Do let me know. Everybody is okay with the difference between exempted and zero rated. Zero rated means whatever input taxes you have paid, you will get it back. Simple. You will get it back. Whereas nil or exempted simply means your output will attract 0% GST. But your inputs could have attracted 5%, could have attracted 12%, could have attracted, right, let's say 2.5%. They will not give you input tax credit on that. That is actually happening now. That is one of the issues or concerns associated with the latest reform. Done? Okay. Right. So exports are zero rated under GST. Are exports zero rated under GST? Yes. Please remember, exports are zero rated. They should be zero rated. If you ask me, sir, why? Why should we have zero rating of exports? My dear, if you have GST included in the market price, don't you think market price of your export would be higher? If the market price of your export is higher, do you think there'll be higher demand for your product in the international market? Does it make any kind of economic sense? Tell me. Does it make any kind of economic sense? If you impose the taxes on your exports, the competitiveness of your export will go down. Your exports will suffer. Right? That is the basic issue here. Okay, let's go forward. So this was the model of GST implemented. What is the issue? What is the issue with this kind of a model where we had 0, 5, 12, 18 and 28% GST rates? 5, 12, 18 and 28%. These are the most important GST rates. First and foremost, why did government adopt this kind of a model? Why did we go for this model? The reason was cited as, in case of India, different consumers are there. And when we have different consumers, I cannot have only one tax rate. Doesn't make any sense. I should not be having only one tax rate. I will borrow the statement basically given by the former finance minister as well as the prime minister Arun Jaitley ji as well as PM Modi on the floor of parliament. What they said was, in case of India, you cannot have the same GST rate on a Hawaii chappal as well as an Audi car. You can't have the same GST rate on a Hawaii chappal as well as an Audi car. There has to be a difference in the GST rate. So government of India simply said consumption patterns are different. Consumers are different. Right? The type of goods are different. Some of them are very luxury goods. Some of them are basic goods, etc. So I cannot have only one rate of GST. I will have to have multiple rates of GST. With that objective, multiple slab structure of GST was implemented. But have a look at this. Because there are multiple slabs under GST, it also led to lot of confusion. It led to lot of confusion, lot of complexity in the taxation. The argument was earlier we had different rates with different names. I'll repeat the statement. Earlier we had different names and different rates of indirect taxes. Under GST, we have only one name but different rates. So, what has changed? What kind of reform we have implemented? This looks like old wine in a new bottle. This basically looks like old wine in a new bottle. That's it. You have packaged it in a different way, but the component still remains the same. Multiple rates are still present. Right? So, lot of complexity, lot of confusion regarding the implementation. And one more bigger problem was there was a problem of inverted duty structure. All of you, please listen to me very carefully. Slightly technical. Please listen carefully. Inverted duty structure. What is the inverted duty structure? Normally, what will happen? I will write it. Please listen carefully. If you do not listen, after 2 minutes, you will keep on typing. What is inverted duty? Right? I'll realize you are not listening. Now, listen carefully. Normally, what will happen? Let's say A will sell to B, B will sell to C. B will sell to C. Let's say step number one. Step number one, GST will be 10 rupee. And the step number two, GST will be bigger than 10 rupee. Let's say 15 rupees. And this is common. This is how GST should work. Everybody is able to understand this, sir. How can be the GST greater than in the step number two, greater than the step number one? My dear, in the step number one, you purchase raw material, let's say 100 rupees. Obviously, 10% of 100 will be 10 rupee. Now, in the step number two, right, you will take raw material of 100, you will add a value of, let's say, 50 rupees. You want to sell it at 150, let's say 10% tax. Second step, GST will be 15 rupees. Everybody is able to understand this. But what does it actually mean? What is the information you need to take away from this? The GST on the output, I repeat, the GST on the output is greater than GST on the input. Understand this. The GST on the output is greater than the GST on the input. But in case of inverted duty structure, A will sell it to B, B will sell it to C. What will happen in the inverted duty structure will be the taxes on the input will be greater than taxes on the output. I will tell you how. Have patience. In the inverted duty structure, the taxes on the input will be greater than the taxes on the output. Now you will be ready with your keyboard. Ready with the keyboard. Sir, how is that possible? Tell me right now. Tell me right now. Tell me right now. And someone will say, sir, why should I type three times? I will type Control C, enter, Control V, enter, Control V, enter, enter, enter. Until unless you answer to my question, I'll keep on typing Control V and enter. I'll explain it now. The problem with the GST model that we implemented was same product would be used as a raw material in the production of different goods. I'll repeat the statement. Same product will be used as an input for producing different goods. Right? Possible? Let me give you example here. Let's say plastic. Now tell me, can the plastic be used to produce Hawaii chappals? Correct? Can the plastic be used to produce Hawaii chappals? Yes. Can the plastic also be used in manufacturing of cars? Of course, yes. So now The same input is used in producing two different goods. Hypothetically, don't worry about exact GST numbers. Let's say hypothetically, chappal will attract 5% GST, car would attract 28% GST, and plastic, let's say, government will decide because it is used in car, should attract 18% GST. Now, please look at the plastic attracting 18%, chappal attracting 5%. Please tell me, is this kind of outcome possible or not? Is it okay? I'll repeat this again. Look at plastic applying or plastic attracting 18% GST, chappal attracting 5% GST. Please tell me, is this kind of outcome possible or not possible? All of you will agree it is possible? Yes or no? Do let me know in the chat section right now. Do let me know in the chat section. So this kind of outcome was possible where input will end up having more GST compared to output. This is inverted duty structure. This is inverted duty structure. And don't you think because you have multiple rates of GST, inverted duty structure is a possibility? It has happened in India. It has happened in India. And what is the problem with this? What is the problem? The problem is, if you are a company, if you are a very, very small manufacturer, just think of this. If you are a very, very small manufacturer, first and foremost, the money that is there with you is very limited. The money that is there for expenditure purposes is very, very limited. Now, 15 rupees you have paid on your inputs. It is there with the government. Government will take 3 months for you to get input tax credit. Correct? Is this a problem? Government will take 3 months to provide input tax credit to you. So, a lot of these micro enterprises, I'm using a technical term, lot of these micro enterprises which suffered because of lack of capital, precious capital of these micro enterprises was stuck in the system because of inverted duties. And inverted duty structure was happening because of what? Because of multiple tiers of GST, multiple rates under GST. So there were a lot of issues or concerns associated with the model of the GST that was implemented from 1st July 2017. From the 1st July 2017. In fact, I still remember after the GST was implemented, and it was Mr. Arun Jaitley who was the finance minister back then. It was him at the helm of finance ministry when the GST was implemented. He marketed GST as a good and simple tax. Basically marketed GST as a good and simple tax. And when the experts looked at all of these particular problems, the newspaper ran a headline: the GST is neither good nor simple. GST is neither good nor a simple tax. Right? So finally, after 8 years, Government of India, rather than having small reforms, piecemeal reforms, finally the Government of India has implemented a rationalization exercise. What do you mean by rationalization? Listen to me carefully. Rationalization essentially means you're changing the composition, but you're trying to make it much more logical. All of you are able to understand the meaning of the term rationalization here? You're changing, you're simplifying it, but it is more rational. You're not simply cutting down the rates. No, you're making the structure much more rational, much more applicable. That is basically the meaning of rationalization. Right? So don't simply in the mains examination, don't write the Government of India has reduced the GST rates. Don't write that. Say Government of India has rationalized the GST structure. So what has the Government of India done now? Simple. As per the latest announcement of the government, followed by which the GST Council also approved it, rather than having multiple slabs now, we will have simply one 5% slab. One is a 5%, and the other one is 18%, and the third one is 40%. Understand this. Rather than having right multiple slabs, we will have 5, we will have 18 and 40. And before you start simply typing and asking me, sir, earlier there was 5, there was 12, there was 18, and there was 28. What have we done? We have simply reduced the number of slabs. From 4, we have reduced it to 3. It is not a very great change. No, please do not look at only the number of rates. Please do not look at only the number of rates here. Don't simply say instead of 4, now we have only 3. No, that is not the exercise. That is not the complete or accurate understanding. What is the accurate understanding? Most of the goods and services will be put under 18%. Most of the goods and services have been kept under 18%. That is the ones which are revenue generating. Most of the goods and services which are consumed by the common man are kept at 5%. Only the luxury goods, only the sin goods or luxury goods have been kept at 40%, which comes out to be around 6 to 7. That's it. So it is not just that we have reduced the number of rates. No, we have basically changed the GST rate applicable for most of the goods. Right? That change also has been done by the government to make the system much more rational. So 40% is not a proper slab per se. That is basically we are identifying around 6 to 7 products which are demerit or the sin, and we are having, let's say, 40% for that. But most of the other goods will fall under 5 and 18%. Everybody is okay with the discussion? Right, so this is the rationalization exercise which has been conducted by the GST Council, which will come into force from 22nd September. Right, 5 more days from 22nd September 2025. Why it was done? We have understood the problems compared to the earlier system. To address those particular problems, this rationalization exercise has been conducted. But are there any challenges associated with even this? Are there any problems associated with even this particular model of GST? Of course, yes. There will be certain problems, right? The structure or the model that is going to be implemented is not a perfect model. There are still certain concerns. For example, with changes in the taxation structure, the government will end up losing certain amount of revenues now. Government will end up losing certain amount of revenues. That is a concern. How much? According to the union government, according to the central government estimates, we are going to end up losing somewhere around 48,000 crore rupees. Somewhere around 48,000 crore rupees. That's not a small number, by the way. That's a very large number, especially looking at certain states. Certain states which are already under the financial pressure, for them, this right number which will go to the states will be a very big number for them. That is one concern. Second concern is profiteering. How will the government ensure there will be profiteering now? Right? How the government will ensure that there is no profiteering now? What is the meaning of profiteering here? Simple. If the government will reduce, let's take a simple number here. Imagine there was a product earlier, the actual price was 100 and it attracted 12% GST. So can I simply say the market price will be 112 rupees? Correct? Market price, MRP, will be 112. Now, if it will be brought under 5%, if this product will be brought under 5%, you are expecting the MRP to become 105. You're expecting the MRP to become 105. But what is the guarantee then? What if the sellers do not transfer the complete benefit of rate reduction you to me? Instead of selling it at 105, what if they sell it at 107? What if they sell it at 108? This is basically profiteering. Profiteering means what? Whenever you make unreasonably higher profits. when you make unethically higher profits. That is basically the concept of profiteering. Lot of experts are warning the government that the government has rationalized. Government has brought lot of these goods from 12% to 5% to 0%, etc. But the sellers, the manufacturers may not transfer the complete benefit of rate reduction to the consumers. They basically might profiteer. In fact, earlier, listen to me carefully. Earlier, to address these kind of issues, there was one authority, National Anti-Profiteering Authority, NAA. There was one authority which was established back in 2017. But this particular authority has been closed. It has been shut down now. Reason was, initially when the National Anti-Profiteering Authority was established, the argument of the government was the market is competitive. If one company will profiteer, other companies will transfer the complete rate reduction to the consumers, which means their products' market prices will be much lower. They will end up getting a lot of consumers. And if this company doesn't reduce the price by appropriate number, then they will end up losing consumers. So that is the reason for certain time period, only for certain time period, anti-profiteering authority was established that has been closed. Later, the anti-profiteering cases were taken up by Competition Commission of India. And then Government of India said, Competition Commission will also not take up anti-profiteering cases. The GST Appellate Tribunal will take up the anti-profiteering cases. And from the 1st April 2025, Government of India said, no more anti-profiteering cases will be admitted. Repeat, no more anti-profiteering cases will be taken up, right, or admitted after 1st April 2025, which has been implemented now. So with this kind of a rationalization exercise, what if the sellers, the companies will start to profiteer all over again, right? So that will basically mean the complete benefits of rate reduction will not reach to you and me. That is the challenge that the government of India will face now. So these are certain important concepts associated with the goods and services tax. What is the structure of the GST? What were the right issues with the GST model? And what has the government of India done? And what are the challenges for the government of India going forward with the model of the GST that has been? Please take up this particular assignment question for descriptive answer writing. The GST rationalization is not just a tax reform, but a prerequisite for achieving the goal of 5 trillion economy. I'll repeat the question again. The GST rationalization is not just a tax reform, but a prerequisite for achieving the goal of $5 trillion economy. Discuss the question in 150 words, a 10 marker. Either it could be for 150 words or it could be even for 250 words. Done? Right. So these are the various important concepts I wanted to discuss in the context of goods and services taxation. Now, if you have any kind of questions, do let me know. Otherwise, we can close the session. And by the way, regarding one of the MCQs that I discussed yesterday, right, there was one MCQ that was basically the core inflation has never crossed 6% since right the implementation of the monetary policy framework agreement, and headline inflation has never crossed 6%. The objective of that particular question was in the context of the discussion. Context was we were discussing what has been the performance of the inflation targeting. Now listen to me very carefully. Some of you have written mail to me saying that, but sir, in this month core inflation was 6% or 6.2%, 6.1%, etc. The objective was annual inflation, annual. And moreover, there is no consolidated data, but please listen to me carefully. There is one report, one survey that is published by Reserve Bank of India. According to that particular survey, for the financial year 22 and 23, I repeat for 22 and 23, according to that report, core inflation was 6.1%. So please correct that. Even the second statement will be incorrect. Both of the statements will be incorrect. Okay? Huh. Now, any questions? Do let me know. Only state finance minister should participate, or will they represent by others? State finance minister, revenue ministers will be there. After cancelling all taxes and introducing GST in India, how much profit does the government get that previous model of taxation? What do you mean by profit? My dear, there is no concept of a profit here. The government is not earning profit. Government is generating revenues. Don't use the term profit. If you are meaning to ask me, sir, have the tax receipts increased after the GST? Answer is yes. Answer is yes. Tax receipts after the implementation of GST has increased. Right? Yes, the answer is yes, by the way. Difference between exemption and zero rate. I'll repeat it again. Zero rated simply means the whole supply chain, there is no tax. Even if there is a tax, it will be credited back. Zero rated. Right? Exempted simply means in the supply chain, there will be taxes. The final product that you sell in the market, only that will attract 0%. That is a difference. By rationalization of taxes, we are losing revenues. How then achieve 5 trillion? My dear, do you think GST will help us become $5 trillion economy? $5 trillion economy is not referring to GST, it is GDP. By rationalizing GST, is it not going to promote ease of doing business? Will it make the structure much more, right? Let's say much more feasible, much more easier for the companies to invest, etc. That is the logic. The idea is 5 trillion is not GST, it is GDP. The simply the simpler you make the structure, more investments you will attract, more consumption you will attract, right? More investment you will attract. That will help us become $5 trillion economy. Okay. Uh, if people get save money from the GST, then it may be inflationary. No, we are expecting that with lower GST rate, market prices will go down. With lower market prices, people will consume more. The demand will increase, not to the extent that it will cause inflation. Because in India, what is inflation rate? 1.5% right now. Okay. VAT still exists or not? My dear, listen to me very carefully. All the indirect taxes, even today, have not been subsumed under GST. I'll repeat the statement. All the indirect taxes have not been subsumed under GST. For example, I told you this petrol and diesel or aviation turbine fuel. The state government has its own taxation. They call it as a sales tax or VAT for that matter. Central government will have its own specific duties, that is, excise duties on petrol and diesel. They are still there. All of them have not been subsumed so far. Okay. In zero rated tax, a destination is outside India, so SGST can be exempted but can impose a CGST. No, my dear. You're trying to simply complicate. You're simply trying to complicate. Why? In what universe, you tell me, imposing taxes on export makes a sense if your objective is to promote export? You tell me. In what universe does it make sense for you to impose the taxes on the export if your objective is to export more? You think government of India wants to reduce exports? No, they want to promote exports. And the best way to promote export is to ensure the market prices are lower. And to keep the market prices lower, you cannot impose taxes on exports. It doesn't make any sense, by the way. Okay. Assignment for tomorrow class? Yes. Tomorrow 7 p.m. Tomorrow 7 p.m. 7 p.m. we will take up the assignment. That is the exercise, the first session for Economy for Mains initiative. Please do not miss out the class, but please understand my argument here. Do not join the session as a tourist. Don't simply come there, sit without any preparation, look at the class, how it is happening, who is saying what faculty is saying. No, I want you to prepare and then come to the class. Because, like I said, this is for your mains answer writing practice. So, tomorrow, 7 p.m., do not miss out the special class. And before I close the session, I'll repeat this again. Listen to me carefully. The PPT that I'm using, along with the handouts, will be uploaded in the portal, or basically in the drive, the link for which I've already shared with you. So please download, use the link, download the PPT as well as the handout, and use it for revision purposes. Done? Okay. Any other question? Whether this reform helps fight USA tariff? Yes, yes. To a certain extent, it will provide relief, right? It will provide relief. Okay, done then. So that's it from my side. Take care. See you tomorrow in the special class, 7 p.m. Have a great day.